Hi students, this concept number 2, accounting treatment of goodwill for CBSE, ISC Class 12 students. This video for CBSE and ISC students. Let us start the today's concept number 2. Goodwill amount is retained in the business. It is half of the goodwill amount is withdrawn by the sacrificed old partners. This is a situation type, question type. Now start the question. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two partners. One is Mr. A, another one is Mr. B. Sharing profits and losses in the ratio of 3:2. It is old profit sharing ratio, 3:2. Their balance sheet as on 31st/3/2024 was as follows. The term used is was. It means that this is old balance sheet. Okay. Next. Balance sheet of Messrs. Mr. A and Mr. B. Who are the Mr. B? As on 31st/3/2024. Draw the balance sheet like this. Left hand side capital and liabilities amount rupees. Right hand side assets amount rupees. Capital Mr. A, Mr. B. Asset side cash or bank. Okay. Let us move. On 1/4/2024, they admit Mr. C into the partnership on the following terms. Now this question is relating to admission of a partner. Why? The term used is Mr. C is admitted into the partnership firm. Now, who are the old partners? Mr. A and Mr. B. What is the OPSR? That is old profit sharing ratio, 3:2. What is the old balance sheet date? 31st/3/2024. The date on which new partner is admitted into the partnership firm on 1/4/2024. Who is the new partner? Mr. C. Okay. Move on. Mr. C should bring in cash rupees 25,000 as his capital and rupees 15,000 for goodwill for 1/5 share in the future profit. As I told you in this question, OPSR and new partner profit sharing ratio are given. OPSR is 3:2. New partner share is 1/5. And if the new partner bring the cash for goodwill, here is the word, he bring rupees 15,000 for goodwill. So the situation is if the new partner bring the cash for goodwill. Adjustment number 2. Half of the goodwill is withdrawn by the old partners. I told you half of the goodwill is withdrawn by the old partners. Okay. This is case number 2 or concept number 2. Show the accounting treatment of goodwill as per AS 26 by preparing partner's capital account and cash/bank account. This is the question. Please pause the video and note down it. After that, I'll start the solution. Let us start. Solution to concept number 2. So in order to give the accounting treatment to the goodwill, in case of admission of a partner, working note number 1 is to calculate the sacrifice ratio. Okay. Sacrifice ratio is equal to OPSR. Why? In this situation, in this question, OPSR sacrifice ratio is equals to OPSR. It means that OPSR itself is the sacrifice ratio. Why? If in the question OPSR and only the new partner profit sharing ratio are given, in such a situation, the sacrifice ratio is equals to OPSR. This is the concept. While calculating the sacrifice ratios, I'll make a separate video. At that time, I'll explain it. Sacrifice ratio is equal to Mr. A ratio Mr. Sacrifice ratio is equal to 3:2 because OPSR is becoming the sacrifice ratio. Okay. I think everybody understanding it. If you are understanding it, you give the thumb impression. Let us continue. Working note number 2. Accounting treatment of goodwill as per accounting standard 26. AS means accounting standard 26. Journal. Draw the format like this. Date, particulars, LF, debit, amount rupees, credit, amount rupees. Step 1 is to pass the journal entry for the new partner bring the cash for goodwill, only relating to goodwill. When the new partner comes into the partnership firm, as per the England system or British system, cash is a real account, debit what comes in. Suppose bank is there, bank is a personal account, debit the receiver. And that partner has given the amount for the goodwill, premium for goodwill. That is a representative account of personal account. That's why credit the giver. Okay. Now, step number 1, cash or bank account debit. New partner bring the cash for goodwill. Amount 15,000. 2. Premium for goodwill account. Personal account credit the giver of the benefit. Means the partnership owes this money to the old partner. Are you understanding it? The firm receive the money from the new partner and then it will distribute to the old sacrificing partners. Okay. So step 1 is to, when the new partner bring the cash for goodwill, what is the journal entry? Cash or bank account debit to premium for goodwill account. Cash or goodwill account. Amount is rupees 15,000. From the question, you should take only goodwill amount. Being cash brought in by Mr. C, who is that new partner, for his share of goodwill credited to premium for goodwill account. Credited to premium for goodwill account. This is step number 1. If you are solving the question, everybody should understand that what is the concept. When the new partner bring the cash for goodwill, the journal entry is cash or bank account debit to premium for goodwill account. Okay. Second step is to distribute this goodwill between or among the sacrificing old partners. In our question, who have sacrificed? Mr. A and Mr. B. So now in order to close the premium for goodwill account, we should check that in the step number 1, whether premium for goodwill is debited or credited. It is credited. See here. In order to close it, now we have to debit it. That's why premium for goodwill account, we have to debit it. So premium for goodwill account debit. Premium for goodwill account debit. What is the goodwill amount? 15,000. To Mr. A's capital account. 15,000 into 3 by 5. Why 3 by 5? Sacrifice ratio is 3:2. Mr. A's share is 3 by 5. It is 9,000. To Mr. B's capital account. 15,000 into 2 by 5. Rupees 6,000. Being cash brought in by Mr. C credited to old sacrificial partners, not old partner, old sacrificial partners in the sacrifice ratio of 3:2. 3:2. So now summarize it. When the new partner bring the cash for goodwill, we have to follow the 2 steps. Step number 1, cash or bank account debit to premium for goodwill. Second step is to distribute that goodwill amount between or among the old sacrificial partners. So in order to close the premium for goodwill account, earlier it was credited, now it should be debit. Premium for goodwill account debit to Mr. A's capital account to Mr. B's capital account. Okay. In the question, adjustment number 2 is that half of the goodwill amount is withdrawn by the old partners. For that we have to go to step number 3. If it is given, then only you pass the step number 3, otherwise no. When the new partner bring the cash for goodwill, we have to follow the 2 steps. Step 1, step 2. And step 3 is only you should consider in the question. Suppose goodwill amount is withdrawn by the partners. In this question they are saying that half of the goodwill amount is withdrawn by the old partner. That's why we should follow this entry. Let us start. Who has withdrawn the money? Mr. A. Debit the receiver. Mr. A's capital account debit. 9,000 into, why 9,000? Mr. A's goodwill is 9,000. Its half is 9,000 into 1 by 2. It is 4,500. Next, Mr. B's capital account debit. Personal account debit the receiver. 6,000 into 1 by 2. Why? This 6,000 into 1 by 2, half of the goodwill amount. It is 3000. To cash/bank account. If it is a cash real account, credit what goes out. If it is a bank account, personal account, credit the giver. So 4500 plus 3000 is 7500. Being half of the goodwill amount is withdrawn by the sacrificed partners. Okay. Now I explained this. So up to this stage I explained these entries as per the real account, personal account and nominal account. Now if you are solving this question as per American accounting system, cash is asset account. Okay. That's why when increase in the asset, debit. Premium for goodwill account is this amount is considered as you can consider it as a income, as a revenue for the premium for goodwill. Okay. At that time, or you can treat it as a capital amount relating to with the amount owed by the partners, old partner to the new partnership. Okay. No, I'll tell you. Let us say when you are solving this question as per the American accounting system, cash account is an asset account, increase in the asset, debit. Okay. Now suppose you deposited that amount into the bank balance increased, asset, increase in the asset, debit. And premium for goodwill is a income to the partnership firm. So that is revenue account, increase in the revenue, credit. Okay. So cash or bank account, debit to premium for goodwill account. Second step is to distribute this goodwill. So in order to close this premium for goodwill account, earlier it was credited, now it should be debit. Premium for goodwill account, debit to Mr. A's capital account. This amount entered into the A's capital, so increase in the capital, credit. To B's capital account, his share of goodwill entered in his capital, increase in the capital, credit. Third step is when goodwill amount is withdrawn, that amount is withdrawn by the old sacrificed partner. Their capital balance decreases, decrease in the capital, debit. Then cash is asset account, decrease in the asset, credit. So when the capital balance decreases, debit, and cash asset decrease in the balance, credit. So that's why step number 3, Mr. A's capital account, debit, Mr. B's capital account, debit to cash or bank account. Step 3 should be followed only when goodwill amount is withdrawn by the partner, whether half or full. If it is half, write the half amount. If it is full, write the full amount. I think everybody understanding it. Let us move on to the next slide. Partner's capital account, cash or bank account. Next, premium for goodwill account. Prepare all these 3 accounts that you can understand the concept. What is the first entry? When the new partner bring the cash for goodwill, cash or bank account debit to premium for goodwill account. Check here. Cash or bank account debit to premium for goodwill. As per working note number 1. Working note number 2, step number 1. From that journal entry. What is the goodwill amount? 15,000. Okay. Next, when you are writing the premium for goodwill account, when you read the entry in active wise manner, cash or bank account debit to premium for goodwill account. So cash account is debited, that's why I have written on the debit side. But premium for goodwill account is credited. When we are preparing the premium for goodwill account, check it whether it is credited or debited. Credited. That's why premium for goodwill account is credited by cash or bank account. Why? Half of this goodwill amount, that is goodwill amount from the bank, cash or bank account to premium for goodwill. Once again I will explain you. When the new partner bring the cash for goodwill, cash or bank account debit to premium for goodwill. When you are preparing the premium for goodwill account, this premium for goodwill account is credited. That's why we should write on the credit side. Premium for goodwill account is credited by cash or bank account. This is step number 1. Step number 2 is to distribute this goodwill between or among the old sacrificed partners. For that journal entry is that premium for goodwill account debit to Mr. A's capital account. 15,000 into 3 by 5 in the sacrifice ratio. To Mr. B's capital account, 15,000 into 2 by 5. It is rupees 6,000. Step number 2, journal entry. You go to the working out number 2. In that journal entry, I have given it. So what is the second step? Premium for goodwill account debit to Mr. A's capital account to Mr. B's capital account. This 15,000 in sacrifice ratio. 3:2. I think everybody understanding it. When I read the step number 2 entry in the activized manner, it is like this. When I am reading it in a passivized manner, come to the partner's capital account. Mr. A and Mr. B's capital accounts are credited by premium for goodwill account. By premium for goodwill account. So when in the second step, Mr. A and Mr. B's capital accounts are credited. That's why in their capital account I am writing on the credit side. But which account is debited? Premium for goodwill. So working out number 2, step number 2. In sacrifice ratio 3:2, that 15,000. Mr. A 9,000 from this account. Okay, are you understanding or not? Once again I am explaining it from this account. In the Mr. B's capital account, by premium for goodwill account is 6,000. That is 15,000 into 3 by 5, 2 by 5. This 6,000 is taken from the premium for goodwill account. Once again check it like this. I think everybody understanding it. So this is for when the new partner bring the cash for goodwill, step number 1 and step number 2. When half of the goodwill amount is withdrawn by the old partners, in such a cases, Mr. A's capital account debit, Mr. B's capital account debit to cash or bank account. But before that, you check it. Premium for goodwill account closed or not? 9,000 plus 6,000. Sorry, it is 15,000. Total on the credit side, 15,000. It is closed. Okay. When the old sacrifice partner withdrew the amount, entry is Mr. A's capital account debit, Mr. B's capital account debit to cash or bank account. Sorry, half of the goodwill amount withdrawn. This 9,000 half amount, this 6,000 half amount. Step number, working out number 2, step number 3. This 9,000 into 1 by 2, 4,500. This 6,000 into 1 by 2, that is 3,000. Okay, understanding or not? Now, when goodwill amount is withdrawn by the partner, Mr. A's capital account debit to cash account, Mr. B's capital account debit to cash account. It is in activized manner. When you are writing in the cash or bank account, you read the entry in passivized. Cash or bank account is credited, because in this journal entry it is credited. So when it is on the debit side of the partner's capital account, in the cash or bank account, you should write on the opposite side, credit side. So cash or bank account is credited by Mr. A's capital account. By Mr. A's capital. It is double time, you write only one time. Amount is rupees 4,500. From where I have taken it? By Mr. B's capital account. 3,000. I have taken this amount from the partner's capital account. One more time you check it. 3,000. Everybody understanding it? Okay. I am not feeling well, that's why. And today's class there may be some differences. Please excuse me. So everybody understanding it properly. If still you have any doubt, you write in the comment box. Students, if you are understanding, you like it. If you are not understanding, give the comment. And subscribe the channel and share it to your friends. In the comment box, you may write your name and your college name. Okay, this is for CBSE as well as ISC Class 12 accounting treatment of goodwill concept number 2. Thank you.